Hello traders, Gary Wagner here, just after 10 o'clock in Honolulu, 4 o'clock in New York on Monday, the 21st day of July, 2014, and this is the daily report for gold and silver. We do have the precious metals slightly higher to, in essence, unchanged on the day. First to gold, 1312.04, current print on the screen, puts it up roughly $1.50 on the day. The low, 1309.30, the high, 1319.50. Silver also trading higher this morning, currently up about 5 cents on the day. It is trading over $21. That is important, currently at 21.03, the low 20.80 and the high 21.23. More on silver towards the end of the show. Traders over the weekend, geopolitical uncertainty certainly did escalate, not only in Gaza but in the Ukraine, where there are still many issues that need to be resolved. We're looking at a 360-minute chart. On a technical basis, what we can definitely see is really good support at the 50% retracement level. That, of course, is 1293. We can see that the market did come up, made a play roughly, I believe the high was about 18. As the market came back down, it found support really here at 1306. You can see that with these lows right in here, and then as begin to track higher. What I have done is simply added one fib retracement, and this fib retracement will help guide us in terms of our current trade, and it really is a retracement of this particular corrective wave down. And when we look at that corrective wave down, I am looking at this current wave. I'm calling this our B wave, currently composed of a 1, a 2. I believe we're on the third component of this particular B wave or counter wave, to move towards the upper end. I would say 1331, 1332, at minimum about 1317, but it is this particular area that I believe, if our wave count holds true, that we should see the market move back into. And traders, this is yet another way to look at it. This, of course, is a daily chart. We have a couple of different fib retracements, but we have the one that we just spoke about, which is from the top to the bottom of this corrective action here, because of where I put the lines, puts it at about call it 1319, 1318.78 up to 1333, 52.75. Of course, I leave it as 76% retracement because it is a fib number itself. When we take a look at it, this, of course, being a daily chart, we can easily identify the rally that we saw last week. This took us up to these tops here, probably at around 20, 21, 22. And then, of course, the market back tracing and backpedaling, I should say, finding support at 1305. So as I said, we have good support at 1305. We have a secondary level of support at 1293. I'm pegging current resistance first at 1318 and then at 1333. I think we've identified levels of support in the market. We talked about different levels of resistance. My sense right now, I want to draw your attention. This is a daily chart, the COMEX contract of silver. This is the 1331 area that we're pegging as our upper level in terms of our exit target on our current long trade in gold. Above that particular point, the next real level has got to be about 1343, and I really base it upon this particular top right in here. So traders, all I've really done is converted our daily chart, which was in standard Japanese candlesticks, into a Japanese average chart, which of course uses the midpoint of the prior day. Let's just for the time being get rid of our particular fib retracement so we can take a much more detailed look at it. And the one thing that becomes very apparent when we look at this is we do have some sort of an uptrend. The market has found support, this being 1300 right in here. However, at the same time, as we look at this and look for insight in terms of any kind of strength of this uptrend, it is weak at best. We have tails on all three of the last trading days. These lower tails indicative, as you can see right in here, when a market is really moving with some momentum to the upside, it will typically not trade at or below the midpoint of the prior day. You can see that in this particular rally here. Look at A, the size of the candles, and B, the absence really of these lower wicks. When the wicks begin to come back in, that's when the market genuinely traded sideways for a while. However, we can see points in the gold market, such as right down in here, where the market did track higher, but it really took some steam really to break the inertia, so to speak. So you have this dynamic downtrend. This, of course, is the beginning of June when we get this right here. We've got May, and then we go into, as the market is tracking down, by the end of May, it's found a bottom. That bottom is 1240, and realize that bottom is above the prior low that we had before this rally, because this rally that culminated just below 1400 started at 1180. So we do have a higher low, which is good. But as the market begins to trade up, you have this pivotal doji candle right here in red, and then the first two trading days, of course, you have these wicks still present in the market. Third day, the wick is gone. It doesn't trade below the midpoint, however, very, very small bodied. And then another wick comes in on the fifth trading day. And it's not until the sixth trading day that you start seeing the market really build momentum. The candle size grows, as well as the fact that it loses those lower wicks, trades sideways for a little while. In fact, that's when we got our 61% retracement before spiking and moving to higher ground. I say that because not every single time we get a rally, we'll get this textbook rally where it loses these lower tails with nice body size, such as we get right here. So the fact that we have a uptrend and that uptrend is mired with weakness still doesn't predicate that we'll see the market go to weaker prices, but it's having a little bit of difficulty really making it to higher ground. So traders, one study that I've deemed pretty important in terms of trying to give us a handle on whether or not we've broken out of this long bearish channel that has been prevalent in the market for the last couple of years, when you consider that really since the market hit 1900, it then traded sideways between 1800 and 1534. That's this area right in here. Comes back for a triple top at 1800, and then begins to fall. By creating the Andrews pitchfork from those price points, meaning this low here, this high here, and the handle, which of course comes in from 1900, we could truly say that as long as it remained below this particular prong and above this prong, meaning 0 here and 100 here, that we were truly defining ourselves in this down channel, even though it would move within this channel from the highs to the lows. We had the one fake out, and then here we had our first real breakout above that channel line. Now realize they're cascading, so they continually go lower, and so the particular breakout point becomes lower and lower in price. However, we truly saw the market break right in here. As it broke above this channel itself, it hit this top. This is our top, I believe, at around 1341. And even on this last decline, it has maintained itself really above this point. And as long as it does, I remain distinctly open to the possibility that we're seeing some sign of a pivot point or a bullish reversal from this long-standing move. Now, as far as silver goes, I do believe it's going to be moving in unison with gold, or in sympathy, I should say. And so that when we see higher pricing in gold, we have been seeing higher pricing in silver. In terms of critical levels of support, 2045. We're currently trading 2103. 21 to me is an important number. It's like the century marks in gold, the single marks. And I think that the critical point we really need to see it hold above is 2087. That is a 23% retracement, and that is a retracement from the entire rally, which began in June and culminated really the beginning of July. maintain our current long position in gold, maintain our current long position in silver. We will look to tighten stops sometime about midweek or when we feel that it is necessary. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow on Tuesday for another daily update and review. Bye-bye.